Question 1. Cost-benefit analysis shows that implementing robust cybersecurity measures for client data in Florida real estate transactions is essential. Which of the following approaches best balances security needs with operational efficiency while adhering to professional responsibilities? Option A. Conduct a comprehensive risk assessment to identify vulnerabilities and develop a layered data protection strategy including technical, administrative, and physical safeguards. Option B. Prohibit all electronic data sharing and restrict client communications exclusively to in-person meetings to minimize digital exposure. Option C. Install basic antivirus software on all devices and consider this sufficient protection for all sensitive client information handled during real estate transactions. Option D. Immediately adopt a new, feature-rich cloud storage service without thoroughly vetting its security architecture or assessing potential data exposure risks. The correct answer is A. Conduct a comprehensive risk assessment to identify vulnerabilities and develop a layered data protection strategy including technical, administrative, and physical safeguards. Explanation: scenario analysis. This scenario is professionally challenging because real estate transactions in Florida involve sensitive personal and financial data. Salespersons are entrusted with this information, and a data breach can lead to significant financial losses, identity theft for clients, and severe reputational damage for the agent and brokerage. The challenge lies in balancing the need for efficient data sharing and storage with the imperative to protect client privacy and comply with Florida's data security regulations. A proactive, risk-based approach is crucial to prevent breaches rather than reacting to them. Correct approach analysis. The best approach involves conducting a thorough risk assessment to identify potential vulnerabilities in data handling processes and systems. This assessment should consider the types of data collected, how it is stored, transmitted, and accessed, and the potential threats and impacts of a breach. Based on this assessment, a comprehensive data protection strategy can be developed, incorporating technical safeguards like encryption and secure storage, administrative controls like employee training and access policies, and physical security measures. This aligns with the principles of data protection and cybersecurity best practices, which are implicitly supported by Florida's general consumer protection laws and the ethical obligations of licensees to act in their clients' best interests, which includes safeguarding their information. Incorrect approach is analysis. Implementing a new, unproven cloud storage solution without understanding its security protocols or conducting a risk assessment is a failure to exercise due diligence. This approach ignores the potential for vulnerabilities in third-party services and could expose client data to unauthorized access, violating the duty of care owed to clients and potentially contravening Florida's consumer protection statutes that require reasonable security measures. Relying solely on basic antivirus software and assuming it is sufficient for all data protection needs is an inadequate and reactive strategy. Cybersecurity threats are constantly evolving, and a single layer of defense is unlikely to protect against sophisticated attacks or internal mishandling of data. This oversight fails to address the multifaceted nature of data protection and the specific risks associated with real estate transactions, potentially leading to a breach and violating the ethical obligation to protect client information. Disabling all data sharing features and limiting communication to only in-person meetings is an impractical and overly restrictive approach that hinders legitimate business operations. While security is paramount, such extreme measures can make it impossible to conduct business effectively and may not be a reasonable or necessary step to protect data, potentially impacting the agent's ability to serve clients efficiently, which is also an ethical consideration. Professional reasoning. Professionals in Florida should adopt a proactive and systematic approach to cybersecurity and data protection. This begins with understanding the specific data they handle and the associated risks. A risk assessment is the foundational step, allowing for the development of tailored security measures that are both effective and practical. This involves staying informed about evolving threats, implementing a layered security strategy, and regularly reviewing and updating security protocols. Ethical obligations and legal requirements in Florida necessitate a commitment to safeguarding client information, which is best achieved through a comprehensive and risk-informed data protection plan. Question 2. The monitoring system demonstrates that the Florida real estate market is showing signs of slowing down after a period of rapid expansion, with increasing inventory and a slight uptick in interest rates. A client wishes to sell their property quickly. Which approach best aligns with professional ethical obligations and Florida real estate law? Option A. Immediately list the property at a significantly reduced price to ensure a rapid sale, without a detailed analysis of current market trends or client consultation on pricing strategy. Option B. Focus solely on marketing the property aggressively to attract multiple offers, disregarding the broader market cycle and its potential impact on the property's long-term value. Option C. Conduct a thorough comparative market analysis, CMA, that reflects current market conditions and trends. Advise the client on realistic pricing and negotiation strategies considering the market cycle, and discuss the potential implications of a slower market on the sale timeline and final price. Option D. Advise the client that the market is still strong and encourage them to price their property at the highest possible point to maximize profit, emphasizing that the current trend is temporary. The correct answer is C. Conduct a thorough comparative market analysis, CMA, that reflects current market conditions and trends. Advise the client on realistic pricing and negotiation strategies considering the market cycle, and discuss the potential implications of a slower market on the sale timeline and final price. Explanation. Scenario analysis. This scenario is professionally challenging because it requires a real estate licensee in Florida to interpret market signals and advise a client appropriately, balancing the client's immediate needs with the broader economic context. Misinterpreting real estate cycles can lead to poor investment decisions for the client, potentially resulting in financial losses and damage to the licensee's reputation and professional standing. The pressure to close a deal must be tempered by a thorough understanding of market dynamics and ethical obligations to the client. Correct approach analysis. The best professional approach involves a comprehensive risk assessment that considers the current phase of the real estate cycle in Florida. This means analyzing indicators such as inventory levels, absorption rates, interest rate trends, employment data, and population growth specific to the Florida market. By understanding whether the market is in an expansionary, peak, contractionary, or trough phase, the licensee can provide informed advice on pricing, negotiation strategies, and the potential for future appreciation or depreciation. This aligns with Florida Statute 475, which mandates licensees to act with honesty, fairness, and due diligence, and to avoid misrepresentation or concealment of material facts. Advising a client based on a thorough understanding of the real estate cycle is a demonstration of this due diligence and ethical responsibility. Incorrect approach is analysis. Focusing solely on the client's immediate desire to sell quickly without considering the market cycle is an ethically flawed approach. This could lead to underpricing the property and failing to secure the best possible outcome for the seller, potentially violating the duty of loyalty and full disclosure. Similarly, pushing for a quick sale by downplaying potential market downturns or exaggerating future growth prospects constitutes misrepresentation, which is a direct violation of Florida's real estate laws and ethical standards. Ignoring market trends and proceeding with a transaction based on past performance or anecdotal evidence without current data analysis demonstrates a lack of professional competence and due diligence, exposing both the client and the licensee to undue risk. Professional reasoning. Professionals should adopt a data-driven and client-centric approach. This involves continuous market analysis, understanding the economic factors influencing the Florida real estate market, and using this knowledge to provide objective advice. When advising a client, licensees should clearly articulate the current market conditions, potential risks, and rewards associated with different strategies, and the implications of the real estate cycle phase. Transparency and education are key to empowering the client to make informed decisions that align with their financial goals and risk tolerance. Question 3. Benchmark analysis indicates that a loan underwriter in Florida is reviewing an application where the borrower's stated income appears inconsistent with their employment history, and the property appraisal seems unusually high compared to recent sales in the area. What is the most prudent course of action for the underwriter to take? Option A. Request detailed documentation to verify the borrower's income and obtain a second appraisal or a more thorough review of the existing appraisal to address the discrepancies before making a decision. Option B. Proceed with the loan approval but add a significant risk-based fee to compensate for the perceived higher risk. Option C. Deny the loan immediately due to the apparent inconsistencies in income and appraisal without further investigation. Option D. Approve the loan based on the borrower's credit score, assuming the income and appraisal issues are minor and will resolve themselves. Correct answer is A. Request detailed documentation to verify the borrower's income and obtain a second appraisal or a more thorough review of the existing appraisal to address the discrepancies before making a decision. Explanation. This scenario is professionally challenging because it requires a loan underwriter to balance the lender's need to mitigate risk with the borrower's need for financing, all while adhering to Florida's specific real estate and lending regulations. The underwriter must make a judgment call based on incomplete information, where a misstep could lead to financial loss for the lender or regulatory scrutiny. Careful judgment is required to ensure compliance with Florida statutes, particularly those governing mortgage lending and consumer protection, and to uphold ethical standards of fairness and due diligence. The best approach involves a thorough and documented review of all available information, coupled with proactive communication to obtain any missing critical data. This includes scrutinizing the borrower's creditworthiness, the property's valuation, and the overall loan structure. If discrepancies or missing information are identified, the underwriter should clearly document these issues and request the necessary documentation or clarification from the borrower or originator. This systematic and transparent process ensures that the underwriting decision is based on a comprehensive understanding of the risks and is defensible under Florida law. It aligns with the principles of prudent lending and regulatory compliance by demonstrating a good faith effort to assess the loan's viability and protect both parties. An incorrect approach would be to proceed with the loan approval based on assumptions or incomplete data, particularly when significant red flags are present. This could involve overlooking the borrower's inconsistent income documentation or accepting a property appraisal that appears inflated without further investigation. Such actions violate the duty of due diligence required by Florida's lending regulations, which mandate a reasonable assessment of a borrower's ability to repay and the collateral's value. Ethically, it is also problematic as it exposes the lender to undue risk and potentially misleads the borrower about the loan's suitability. Another incorrect approach is to prematurely deny the loan without a clear, documented, and justifiable reason based on the underwriting criteria and Florida regulations. While risk mitigation is crucial, outright denial without attempting to resolve identified issues or gather necessary information can be seen as arbitrary and may not comply with fair lending practices. The underwriter has a responsibility to investigate and seek clarification before making a final decision, especially when the issues are potentially resolvable. Finally, an incorrect approach would be to approve the loan solely to meet internal volume targets or to appease the loan originator, disregarding the identified underwriting concerns. This prioritizes business expediency over sound risk management and regulatory compliance. Florida statutes emphasize the importance of responsible lending practices, and decisions driven by factors other than the borrower's creditworthiness and the loan's risk profile are unethical and can lead to severe regulatory penalties. Professionals should employ a structured decision-making process that begins with a comprehensive understanding of the loan application and all supporting documents. They should then identify any gaps, inconsistencies, or potential risks. The next step is to proactively seek clarification or additional documentation to address these issues. If, after reasonable efforts, critical information remains missing or unresolved risks are too high, a well-documented denial based on specific, justifiable reasons aligned with Florida's regulatory framework is the appropriate course of action. Throughout this process, maintaining clear and professional communication with all parties involved is paramount. Question 4. Benchmark analysis indicates that a Florida real estate licensee is advising a married couple who wish to purchase a property together and want to ensure that if one spouse passes away, their ownership interest automatically transfers to the surviving spouse without the need for probate. Which of the following explanations best guides the couple toward their desired outcome under Florida law? Option A. Advise them that tenancy in common is the most suitable option because it allows each spouse to designate beneficiaries for their individual share in their will, ensuring their wishes are met. Option B. Explain that establishing joint tenancy with right of survivorship, JT Rose, in the deed is the most direct way to achieve automatic transfer of ownership to the surviving spouse, bypassing probate for that interest. Option C. Suggests that a leasehold interest would be the most appropriate structure, as it allows for the temporary use of the property and can be structured to pass to the surviving tenant. Option D. Inform them that fee simple ownership, by its nature, always includes provisions for automatic survivorship between co-owners. The correct answer is B. Explain that establishing joint tenancy with right of survivorship, JT Rose, in the deed is the most direct way to achieve automatic transfer of ownership to the surviving spouse, bypassing probate for that interest. Explanation. Scenario analysis. This scenario presents a professional challenge because it requires a real estate licensee to accurately advise a client on the implications of different ownership structures in Florida. Misunderstanding or misrepresenting these structures can lead to significant legal and financial consequences for the client, potentially resulting in lawsuits against the licensee and brokerage. The licensee must demonstrate a thorough understanding of Florida property law concerning tenancies. Correct approach analysis. The best professional practice involves clearly explaining to the client that joint tenancy with right of survivorship, JT Rose, automatically passes the deceased owner's interest to the surviving joint tenant, S, without going through probate, provided the deed is properly drafted to include the right of survivorship. This aligns with Florida Statutes Chapter 689, which governs conveyances of interest in land, and recognizes JT Rose as a valid form of ownership with specific implications for inheritance. This method ensures the client receives accurate information about the intended outcome of their ownership choice. Incorrect approaches analysis. Advising the client that tenancy in common automatically passes the deceased owner's interest to the surviving tenant is incorrect and violates Florida law. In tenancy in common, each owner's interest is a separate estate and passes according to their will or the laws of intestacy, requiring probate. Suggesting that fee simple ownership inherently includes the right of survivorship is also a misrepresentation. Fee simple is the highest form of ownership, but does not automatically confer survivorship rights unless specifically established through JT Rose. Recommending leasehold as a method for establishing survivorship rights is fundamentally flawed, as leasehold interests are temporary possessory rights and do not involve outright ownership that can be passed down through inheritance in the manner described. Professional reasoning. Professionals should approach such situations by first identifying the client's goals regarding inheritance and survivorship. They should then explain the available ownership structures in Florida, detailing the legal implications of each, particularly concerning probate and the transfer of property upon death. This requires consulting Florida statutes and ensuring all advice is compliant. When in doubt, seeking clarification from legal counsel or experienced mentors is a crucial step in responsible practice. Question 5. The control framework reveals that a Florida real estate salesperson is representing a seller whose property is located in an area with a history of agricultural use. The salesperson is aware that some neighboring properties have experienced issues with soil contamination from past pesticide use. The seller, eager to sell quickly, asks the salesperson to avoid mentioning any potential environmental concerns to prospective buyers, stating that they have never received any formal notice of contamination on their specific parcel. What is the most appropriate course of action for the Florida real estate salesperson? Option A. Advise the seller that since there are no formal environmental reports filed for their specific property, there is no legal obligation to disclose any potential environmental concerns to buyers. Option B. Advise the seller that any known or reasonably discoverable environmental concerns, including potential issues stemming from historical agricultural use in the vicinity, must be disclosed to potential buyers as a material fact that could affect the property's value or desirability. Option C. Agree with the seller to omit any mention of environmental concerns to facilitate a quicker sale, assuming that the absence of formal notice on their specific parcel means there are no issues. Option D. Recommend that the seller simply state no known environmental issues on the disclosure forms without further investigation, as this is a common practice. The correct answer is B. Advise the seller that any known or reasonably discoverable environmental concerns, including potential issues stemming from historical agricultural use in the vicinity, must be disclosed to potential buyers as a material fact that could affect the property's value or desirability. Explanation. The control framework reveals a common challenge for Florida real estate professionals, navigating environmental regulations that impact property value and disclosure obligations. This scenario is professionally challenging because it requires balancing the client's desire for a swift sale with the legal and ethical duty to disclose material facts, including potential environmental concerns. Failure to do so can lead to significant legal liability, reputational damage, and violations of Florida's real estate licensing laws. Careful judgment is required to ensure compliance while effectively representing the client's interests. The best approach involves proactively identifying and disclosing potential environmental issues. This means advising the seller that any known or reasonably discoverable environmental concerns, such as past industrial use or proximity to known contamination sites, must be disclosed to potential buyers. This approach aligns with Florida Statute 475/278, which mandates disclosure of material facts that could affect a property's value or desirability. Ethically, it upholds the principle of honesty and fair dealing with all parties involved in a transaction. By encouraging full disclosure, the agent protects both the seller from future litigation and the buyer from unforeseen liabilities. An approach that suggests withholding information about potential environmental issues to avoid deterring buyers is ethically unsound and violates Florida's disclosure requirements. This failure to disclose material facts can lead to claims of fraud or misrepresentation under Florida law, potentially resulting in rescission of the sale, damages, and disciplinary action against the licensee. Another unacceptable approach is to assume that because no formal environmental reports have been filed, there are no environmental concerns. Real estate agents have a duty to exercise reasonable care and diligence, which includes being aware of red flags that might indicate environmental problems, even without official documentation. Ignoring potential issues based solely on the absence of formal reports is a dereliction of professional duty and can expose the agent to liability. Finally, advising the seller to simply state no known environmental issues without a thorough investigation or consideration of surrounding property uses and historical data is insufficient. While this might seem like a straightforward answer, it fails to meet the standard of reasonable diligence required of a Florida real estate licensee. If a reasonable inquiry would have revealed potential issues, the licensee could still be held responsible for failing to investigate and disclose. Professionals should adopt a decision-making framework that prioritizes transparency and compliance. This involves 1. Understanding the client's property and its history. 2. Being aware of common environmental concerns relevant to the property's location and past uses in Florida. 3. Advising the seller on their disclosure obligations under Florida law. 4. Recommending professional environmental assessments if red flags are present. 5. Documenting all communications and disclosures made to the seller and potential buyers. Question 6. System analysis indicates that a Florida real estate licensee representing the seller has a buyer who, after signing a standard Florida, as is residential contract for sale and purchase, is unable to secure the necessary financing due to an unexpected job loss. The buyer is now requesting to terminate the contract. What is the most appropriate course of action for the licensee to advise their seller client? Option A. Review the executed purchase agreement to determine the specific clauses related to financing contingencies and default, and then advise the seller on their contractual rights and obligations, facilitating communication between buyer and seller to explore resolution options. Option B. Inform the seller that the buyer can simply walk away from the contract without any further obligation or consequence. Option C. Recommend that the seller disregard the buyer's request and immediately relist the property on the open market. Option D. Advise the seller to immediately retain the buyer's earnest money deposit as compensation for the seller's time and effort. The correct answer is A. Review the executed purchase agreement to determine the specific clauses related to financing contingencies and default, and then advise the seller on their contractual rights and obligations, facilitating communication between buyer and seller to explore resolution options. Explanation. Scenario analysis. This scenario presents a common challenge in real estate transactions where a buyer, after signing a purchase agreement, experiences a significant change in financial circumstances that impacts their ability to secure financing. The challenge lies in navigating the contractual obligations while addressing the buyer's predicament in a manner that is both legally sound and ethically responsible, adhering strictly to Florida real estate law and contract principles. The real estate licensee must balance their duty to their client, presumably the seller, if they are the seller's agent, or both parties if a dual agent, or the buyer if the buyer's agent, with the enforceability of the contract and the potential for disputes. Correct approach analysis. The best professional approach involves a thorough review of the executed purchase agreement to identify the specific clauses related to financing contingencies and default. This includes understanding the timelines, notification requirements, and remedies available to both parties as stipulated in the contract. The licensee should then advise their client, the seller, on the contractual rights and obligations, and facilitate communication between the buyer and seller to explore potential resolutions, such as renegotiation of terms, extension of deadlines, or forfeiture of the earnest money deposit, all within the framework of Florida statutes, Chapter 475, and relevant contract law. This approach prioritizes adherence to the written agreement and promotes a resolution that respects the legal standing of both parties. Incorrect approach is analysis, advising the seller to immediately retain the buyer's earnest money deposit without a thorough review of the contract, and without attempting to communicate with the buyer or their agent, is a premature and potentially unlawful action. Florida law requires adherence to contract terms, and the disposition of earnest money is typically governed by specific clauses within the purchase agreement, often requiring mutual agreement or a court order if there is a dispute. Failing to explore resolution options or to communicate with the buyer could lead to a breach of fiduciary duty and potential legal action against the licensee and their broker. Suggesting that the seller simply ignore the buyer's situation and proceed with marketing the property to other buyers without addressing the existing contract is also an improper course of action. Florida real estate law emphasizes the importance of fulfilling contractual obligations. Until the existing contract is legally terminated or resolved, the seller is bound by its terms, and marketing the property to others could constitute a breach of contract and expose the seller to liability. Recommending that the buyer be allowed to walk away from the contract without any consequences, even if they are unable to secure financing, disregards the contractual commitments made by the buyer. While the licensee should be empathetic, they must also uphold the integrity of the contractual process. Allowing a buyer to unilaterally withdraw without adhering to the contract's contingency clauses or default provisions would undermine the enforceability of real estate agreements in Florida. Professional reasoning. Professionals in Florida real estate must adopt a process-oriented approach when dealing with contractual issues. This involves 1. Understanding the governing documents, thoroughly reviewing the purchase agreement and any addenda. 2. Identifying relevant regulations, consulting Florida Statutes Chapter 475 and case law pertaining to real estate contracts and agency duties. 3. Communicating with all parties, facilitating open and honest communication between buyer and seller, often through their respective agents. 4. Exploring resolution options, discussing potential remedies and compromises within the legal and contractual framework. 5. Documenting all actions, maintaining clear records of all communications and decisions. This systematic approach ensures compliance with legal requirements and ethical standards, protecting both the client and the licensee. Question 7. Risk assessment procedures indicate that a Florida real estate licensee is assisting a seller in pricing a single-family home in a well-established residential neighborhood. The property is approximately 20 years old and has no unique income-generating features. Which property valuation method would best align with Florida's regulatory framework and ethical obligations for providing a realistic market price to the seller? Option A. Comparative market analysis. Option B. Replacement cost method. Option C. Cost approach. Option D. Income approach. The correct answer is A. Comparative market analysis. Explanation. Scenario analysis. This scenario presents a common challenge for Florida real estate licensees, determining the most appropriate valuation method for a unique property. The challenge lies in selecting an approach that is both legally compliant under Florida's real estate regulations and ethically sound, providing the client with accurate and reliable information. Misapplication of valuation methods can lead to misrepresentation, financial harm to the client, and disciplinary action from the Florida Real Estate Commission, FREC. Careful judgment is required to balance the client's needs with regulatory obligations. Correct approach analysis. The most appropriate approach in this scenario is the comparative market analysis, CMA. CMA is a method used by real estate licensees to estimate the market value of a property by comparing it to similar properties that have recently sold or are currently listed in the same geographic area. Florida Administrative Code Rule 61J2-3, 0012, A and B, outlines the duties of a licensee, which include providing accurate information and acting in the best interest of the client. A CMA, when performed diligently and with appropriate adjustments for differences, directly supports this by providing a market-based estimate relevant to the property's current selling potential. It is the standard practice for licensees in Florida when assisting sellers with pricing their property for the market. Incorrect approach is analysis. Using the income approach without sufficient income-generating potential or data would be inappropriate. While the income approach is a valid valuation method, it is primarily used for investment properties where rental income is a significant factor. Applying it to a single-family residence that is not intended for rental income would yield an irrelevant and potentially misleading valuation, failing to meet the licensee's duty of providing accurate information under Florida law. Employing the cost approach as the primary method for a property with significant age and potential for depreciation would also be problematic. The cost approach estimates value based on the cost to replace the property, minus depreciation, plus land value. For older properties, accurately estimating accrued depreciation can be highly subjective and difficult, leading to an unreliable valuation. This approach is generally best suited for newer construction or special-purpose properties, where depreciation is less of a factor. Relying solely on this method for a mature property could misrepresent its true market value, violating the licensee's obligation to provide a competent and diligent valuation. Professional reasoning. Professionals should first identify the primary purpose of the valuation. For a seller preparing to list their property, understanding its current market desirability and potential selling price is paramount. This naturally leads to considering methods that reflect current market conditions and buyer behavior. Next, they should assess the property's characteristics. Is it an investment property? Is it new construction? Or is it a typical residential property in an established neighborhood? Based on these factors, the licensee can then select the most relevant and reliable valuation method. In Florida, for standard residential listings, the comparative market analysis is the industry standard and most appropriate tool for providing a seller with a realistic price range. Licensees must always ensure their chosen method aligns with FREC rules regarding competent service and accurate representation. Question 8. The assessment process reveals that a Florida real estate licensee is working with a first-time homebuyer who is seeking guidance on different mortgage options. The buyer expresses confusion about the distinctions between fixed-rate, adjustable rate, and interest-only mortgages. Which of the following represents the most appropriate and legally compliant course of action for the licensee? Option A suggests that the buyer contact a specific mortgage broker the licensee has worked with previously, stating that this broker is the best in the business and will find them the most favorable loan terms. Option B. Provide the buyer with a clear, factual explanation of the general characteristics, potential advantages, and disadvantages of fixed-rate, adjustable rate, and interest-only mortgages, emphasizing that these are general descriptions, and the buyer should consult with a licensed mortgage broker for personalized advice. Option C. Recommend that the buyer pursue an adjustable-rate mortgage, explaining that it typically offers lower initial payments, which can help them qualify for a larger loan amount in the current market. Option D. Advise the buyer to obtain an interest-only mortgage, highlighting that this will allow them to maximize their cash flow for other investments during the initial years of homeownership. The correct answer is B. Provide the buyer with a clear, factual explanation of the general characteristics, potential advantages, and disadvantages of fixed-rate, adjustable rate, and interest-only mortgages, emphasizing that these are general descriptions, and the buyer should consult with a licensed mortgage broker for personalized advice. The assessment process reveals a scenario where a Florida real estate licensee must advise a client on mortgage options. This situation is professionally challenging because the licensee is not a licensed mortgage broker and must avoid providing specific financial advice that could be construed as steering or misrepresentation, while still fulfilling their fiduciary duty to the client by presenting relevant, factual information about mortgage types. The licensee must ensure their guidance is educational and empowers the client to make an informed decision with a qualified professional. The correct approach involves educating the client about the fundamental differences between fixed-rate, adjustable rate, and interest-only mortgages, including their general characteristics, potential benefits, and risks, without recommending a specific product or lender. This aligns with Florida's real estate licensing laws, which require licensees to act with honesty, integrity, and in the best interest of their clients. It also adheres to ethical standards that prohibit licensees from engaging in activities for which they are not qualified or licensed, such as providing specific mortgage advice. By focusing on factual education, the licensee remains within their scope of practice and avoids potential conflicts of interest or misrepresentation. An incorrect approach would be to recommend a specific type of mortgage based on the licensee's personal opinion or a perceived benefit to the client, without fully understanding the client's complete financial picture or the nuances of each mortgage product. This could lead to a client choosing a mortgage that is not suitable for their financial situation, potentially resulting in negative consequences for the client and liability for the licensee. Another incorrect approach would be to steer the client towards a particular lender or mortgage broker, even if presented as a helpful suggestion, as this could be seen as a referral fee arrangement or an endorsement that goes beyond the licensee's expertise and licensing. Furthermore, failing to disclose the general risks associated with each mortgage type, such as the potential for payment increases with adjustable-rate mortgages or the lack of principal reduction with interest-only mortgages, would be a failure to provide complete and accurate information. Professionals should employ a decision-making framework that prioritizes client education and ethical conduct. This involves understanding the client's general needs and goals, then providing objective, factual information about available mortgage types. The licensee should clearly state their limitations and encourage the client to consult with a licensed mortgage broker or financial advisor for personalized recommendations and to explore specific loan products. The focus should always be on empowering the client with knowledge to make informed decisions with qualified professionals. Question 9. The risk matrix shows a potential buyer in Florida is interested in purchasing a property using a government-backed loan. The buyer expresses some confusion about the differences between FHA, VA, and USDA loans and asks for your guidance as their real estate licensee. Which of the following approaches best aligns with your professional and ethical obligations in Florida? Option A. Tell the buyer that their credit score is the most critical factor, and they should focus solely on that, as other program-specific requirements like debt-to-income ratios or property condition are secondary and often flexible. Option B. Advise the buyer that they can simply inform the lender they wish to use a government-backed loan, and the lender will automatically adjust their requirements to accommodate this, bypassing standard underwriting procedures. Option C. Thoroughly explain the general eligibility criteria and common property requirements for FHA, VA, and USDA loans. Advise the buyer to consult with a mortgage lender experienced in these specific loan types for detailed pre-approval and program specifics, and emphasize that each program has unique guidelines. Option D. Inform the buyer that all government-backed loans are largely interchangeable, and that any mortgage broker can easily handle the application process, regardless of their specific experience with these programs. Correct answer is C. Thoroughly explain the general eligibility criteria and common property requirements for FHA, VA, and USDA loans. Advise the buyer to consult with a mortgage lender experienced in these specific loan types for detailed pre-approval and program specifics, and emphasize that each program has unique guidelines. Explanation. Scenario analysis. This scenario is professionally challenging because it requires a real estate licensee in Florida to navigate the specific requirements and limitations of government-backed loan programs while ensuring ethical conduct and compliance with Florida's real estate laws and regulations. Misunderstanding or misrepresenting these programs can lead to significant harm to consumers, including financial loss and legal repercussions for the licensee. The pressure to close a deal can sometimes lead to overlooking crucial details or making assumptions about program eligibility. Correct approach analysis. The best professional practice involves thoroughly understanding the eligibility criteria and specific requirements of each government-backed loan program, FHA, VA, USDA, and accurately communicating this information to the buyer. This includes advising the buyer to obtain pre-approval from a lender experienced with these specific loan types and to consult with the lender regarding all program details and potential limitations. This approach ensures the buyer is making informed decisions based on accurate information, aligning with Florida's statutory duties of honesty, fairness, and full disclosure owed to all parties in a real estate transaction, as well as the principles of responsible lending practices. Incorrect approaches analysis, advising the buyer that all government-backed loans are essentially the same and that any lender can easily process them is a significant failure. This demonstrates a lack of due diligence and a misrepresentation of the specialized nature of FHA, VA, and USDA loans, which have distinct underwriting guidelines, property requirements, and borrower eligibility. This can lead to the buyer pursuing a loan for which they are not qualified or a property that does not meet program standards, causing delays, financial strain, and potential loss of the property. Suggesting that the buyer can bypass lender requirements by simply stating their intention to use a government-backed loan is a direct violation of ethical conduct and potentially Florida's real estate licensing laws. Lenders are bound by federal guidelines for these programs, and attempting to circumvent these processes is dishonest and can lead to fraudulent activity. This approach undermines the integrity of the loan process and exposes the buyer to severe financial and legal consequences. Recommending that the buyer focus solely on their credit score and ignore other program-specific requirements like debt-to-income ratios or property condition is also professionally unacceptable. While credit score is important, FHA, VA, and USDA loans have multifaceted eligibility criteria that must all be met. Ignoring these other factors can lead the buyer to believe they are qualified when they are not, resulting in disappointment and wasted effort. This misrepresentation fails to provide a complete and accurate picture of the loan process. Professional reasoning. Professionals should approach situations involving government-backed loans by prioritizing education and accurate disclosure. This involves proactively researching and understanding the nuances of each program, advising clients to seek expert guidance from qualified lenders, and ensuring all communications are transparent and truthful. A commitment to ongoing professional development in areas like mortgage financing is crucial. When in doubt, it is always best to err on the side of caution and provide more information rather than less, and to direct clients to specialists when their expertise is required. Question 10. Strategic planning requires a Florida real estate licensee to accurately inform a prospective buyer about the total financial commitment of purchasing a property. A buyer is considering a property listed at $350,000. The property's current assessed value for tax purposes is $320,000, and the local millage rate is 1.8%. The buyer's lender estimates closing costs, including title insurance, recording fees, and lender fees, to be approximately 2.5% of the purchase price. The buyer also anticipates a homeowner's insurance premium of $1,200 annually. Assuming the purchase closes on June 15th and property taxes are paid in arrears for the calendar year, what is the estimated total cost for the buyer to close on this property, including the first year's prorated property taxes and estimated closing costs? Option A. The estimated total cost is $363,600, calculated as $350,000 purchase price plus $800 estimated closing costs plus $4,800 full-year property taxes. Option B. The estimated total cost is $359,600, calculated as $350,000 purchase price plus $800 estimated closing costs plus $800 estimated prorated property taxes. Option C. The estimated total cost is $362,000, calculated as $350,000 purchase price plus $1,200 homeowner's insurance plus $800 estimated closing costs. Option D. The estimated total cost is $349,000, calculated as $350,000 purchase price plus $800 estimated closing costs plus $3,600 prorated property taxes. Correct answer is D. The estimated total cost is $349,000, calculated as $350,000 purchase price plus $800 estimated closing costs plus $3,600 prorated property taxes. Explanation. Strategic planning requires a thorough understanding of real estate principles, including how to accurately calculate property values and associated costs. This scenario presents a common challenge for Florida real estate licensees, assisting a buyer in understanding the financial implications of a purchase beyond the list price. The professional challenge lies in providing accurate, legally compliant, and ethically sound financial guidance that empowers the buyer to make an informed decision without engaging in unlicensed activity. Miscalculations or misrepresentations can lead to significant financial harm to the buyer, breach of fiduciary duty, and potential disciplinary action from the Florida Real Estate Commission. FREC. The best approach involves a clear, step-by-step calculation of the total estimated closing cost based on established Florida real estate practices and common closing cost components. This approach directly addresses the buyer's need for a comprehensive financial picture. It involves calculating the estimated property taxes based on the assessed value and millage rate, the estimated homeowner's insurance premium, and a reasonable estimate for other typical closing costs such as title insurance, recording fees, and lender fees. This method is correct because it adheres to the FREC emphasis on honesty, fairness, and full disclosure. By providing a detailed breakdown, the licensee educates the buyer and manages expectations, fulfilling their duty to act in the buyer's best interest. The calculation of prorated property taxes is a critical component, as is the inclusion of all anticipated expenses, an approach that focuses solely on the list price and ignores all associated closing costs is professionally unacceptable. This fails to provide the buyer with a realistic understanding of the total financial commitment, potentially leading to a buyer who cannot afford the property once all expenses are factored in. This constitutes a failure in the duty of full disclosure and could be considered misleading. Another unacceptable approach is to provide a vague estimate of closing costs without any supporting calculations or breakdown. This lacks transparency and does not equip the buyer with the necessary information to make an informed decision. It also risks underestimating costs, leading to financial surprises for the buyer. Finally, an approach that involves the licensee making a definitive statement about the exact total cost without proper disclaimer or calculation is also problematic. Real estate transactions involve many variables, and providing an exact figure without a clear basis or acknowledging potential fluctuations can be misleading and may stray into financial advice beyond the scope of a real estate license. The professional decision-making process for similar situations should involve 1. Identifying the client's core need, understanding total cost of ownership. 2. Recalling relevant Florida real estate laws and FREC principles regarding disclosure and honesty. 3. Utilizing standard real estate calculation methods for prorations and estimates. 4. Clearly communicating assumptions and potential variables to the client. 5. Avoiding any action that could be construed as unlicensed practice of law or financial advising. Question 11. Governance review demonstrates that a real estate agent in Florida, representing a seller, receives an offer from a buyer that is significantly lower than the seller's asking price. The seller has previously expressed reluctance to negotiate below a certain threshold and has indicated that certain repairs may be necessary, but has not authorized the agent to commit to them. The agent believes they can persuade the seller to accept the lower offer if they can assure the buyer that the seller is open to negotiation and that the repairs might be addressed. What is the most appropriate course of action for the agent to take? Option A. Recommend to the buyer that they look at other properties, as this seller is unlikely to negotiate on price or make any repairs. Option B. Inform the buyer that the seller is likely to accept a lower offer and that the agent will work to get the seller to agree to the repairs, even if not explicitly authorized by the seller. Option C. Advise the buyer to submit a revised offer with a slightly higher price, assuring them that the agent will use their influence to ensure the seller accepts it and addresses the necessary repairs. Option D. Present the buyer's offer to the seller, accurately relaying the terms, and await the seller's instructions on how to proceed, while refraining from making any promises or representations to the buyer about the seller's willingness to negotiate further or address repairs. The correct answer is D. Present the buyer's offer to the seller, accurately relaying the terms, and await the seller's instructions on how to proceed, while refraining from making any promises or representations to the buyer about the seller's willingness to negotiate further or address repairs. Explanation. This scenario presents a professional challenge because it requires a real estate agent to navigate potential conflicts of interest and ensure compliance with Florida's real estate licensing laws, specifically concerning the duties owed to clients and the prohibition against misrepresentation. The agent must balance the desire to facilitate a transaction with the legal and ethical obligations to their seller client. Careful judgment is required to avoid actions that could jeopardize the sale, lead to legal repercussions, or damage professional reputation. The best professional approach involves the agent acting as a conduit for information and facilitating communication between the buyer and seller, while strictly adhering to their fiduciary duties to the seller. This means relaying the buyer's offer accurately and promptly to the seller, and then communicating the seller's decision back to the buyer. The agent must avoid making any representations about the property's condition or value that are not explicitly authorized by the seller, or that could be construed as misrepresentation, especially when the seller has expressed reservations. This approach aligns with Florida Statute 475, which outlines the duties of real estate licensees, including honesty, fairness, and the obligation to deal honestly and fairly with all parties. It also upholds the agent's primary duty to their principal, the seller, to act in their best interest. An incorrect approach would be for the agent to unilaterally assure the buyer that the seller will likely accept a lower offer or make specific repairs without consulting the seller. This action oversteps the agent's authority, potentially misrepresents the seller's position, and violates the agent's fiduciary duty to obtain the best possible terms for the seller. Could lead to the seller feeling pressured or misled, and expose the agent to liability for misrepresentation under Florida law. Another incorrect approach would be for the agent to advise the buyer to submit a lower offer with the understanding that the agent will work their magic to get the seller to agree. This implies a manipulation of the seller or a disregard for the seller's stated price expectations, which is unethical and potentially fraudulent. The agent's role is to present offers, not to engineer deals through questionable tactics. Finally, an incorrect approach would be for the agent to ignore the buyer's offer because it is lower than expected and not present to the seller. This failure to present all offers is a direct violation of Florida real estate law and the agent's duty to their seller. It prevents the seller from making an informed decision and can result in severe disciplinary action from the Florida Real Estate Commission. Professionals should employ a decision-making framework that prioritizes clear communication, adherence to fiduciary duties, and strict compliance with Florida statutes. When faced with a situation involving client instructions and potential buyer expectations, the agent should always 1. Confirm the client's instructions and limitations. 2. Present all offers to the client as required by law. 3. Facilitate communication between parties without making unauthorized representations. 4. Seek clarification from the client before taking any action that deviates from their instructions. Question 12. The efficiency study reveals that a seller in Florida is eager to sell their property quickly and instructs their real estate salesperson to omit mentioning a known, significant structural issue that affects the property's value, stating it's a minor problem that the buyer will likely not discover. What is the most prudent course of action for the Florida licensed real estate salesperson? Option A. Advise the seller of their legal obligation to disclose all known material defects under Florida law. Document this advice and the seller's instructions in writing, and obtain written confirmation from the seller acknowledging their understanding and decision regarding disclosure. Option B. Proceed with the sale as instructed, assuming the seller's assessment of the defect's significance is accurate and that verbal communication is sufficient. Option C. Inform the seller that minor issues do not need to be disclosed and proceed with the sale without further documentation of the discussion. Option D. Discreetly inform the buyer about the potential issue without the seller's explicit knowledge or consent, hoping to mitigate future problems. The correct answer is A. Advise the seller of their legal obligation to disclose all known material defects under Florida law. Document this advice and the seller's instructions in writing, and obtain written confirmation from the seller acknowledging their understanding and decision regarding disclosure. Explanation. This scenario is professionally challenging because it requires a real estate salesperson in Florida to balance the client's immediate desire for a quick sale with the legal and ethical obligations to disclose material facts. The salesperson must navigate potential conflicts between client instructions and their fiduciary duties, ensuring transparency and compliance with Florida's real estate laws. Careful judgment is required to avoid misrepresentation or concealment, which could lead to legal repercussions and damage to the salesperson's reputation. The best approach involves proactively and thoroughly documenting all communications and disclosures to the seller regarding the property's condition and the potential impact of undisclosed issues on the sale price and marketability. This includes advising the seller on the legal requirement to disclose known material defects and explaining the risks associated with withholding such information. By obtaining written confirmation from the seller that they understand these disclosures and their obligations, the salesperson creates a clear record of their professional conduct and adherence to Florida statutes, Chapter 475. This proactive documentation protects both the client and the licensee by ensuring transparency and demonstrating good faith efforts to comply with disclosure requirements. An incorrect approach involves proceeding with the sale without fully documenting the seller's refusal to disclose known material defects, relying solely on verbal assurances. This fails to create a verifiable record of the salesperson's advice and the seller's decisions, leaving the salesperson vulnerable to accusations of complicity or negligence if the defect is later discovered by the buyer. Another incorrect approach is to advise the seller that they are not obligated to disclose minor issues that are not readily apparent, without first consulting Florida statutes, Chapter 475, regarding the definition of material fact and the scope of disclosure requirements. This could lead to the unintentional concealment of a material defect, violating the duty of honesty and fair dealing owed to all parties in a transaction. A further incorrect approach is to unilaterally decide that the defect is not material and proceed with the sale without obtaining explicit written consent from the seller to proceed under that assumption, and without informing the buyer of the potential issue. This bypasses the seller's decision-making authority and fails to uphold the principle of full disclosure to all parties involved in the transaction. Professionals should employ a decision-making framework that prioritizes legal compliance and ethical conduct. This involves understanding the specific disclosure requirements under Florida law, clearly communicating these requirements to clients, documenting all advice and client decisions, and seeking clarification or legal counsel when faced with ambiguous situations or client resistance to disclosure. The ultimate goal is to ensure a transparent and fair transaction that protects all parties involved. Question 13. Governance review demonstrates that a Florida real estate salesperson is representing a seller who is aware of a significant stucco defect on their property. The seller, eager for a quick sale, instructs the salesperson not to disclose this stucco issue to any potential buyers, stating it is a minor problem that will be handled after closing. What is the most appropriate course of action for the salesperson to take? Option A. Tell the seller that disclosure is their decision, and the salesperson will follow their instructions regarding the stucco issue. Option B. Agree to the seller's request and omit the stucco issue from the property disclosure statement to facilitate a faster sale. Option C. Advise the seller to quickly repair the stucco before listing the property and then proceed with the sale without mentioning the prior defect. Option D. Inform the seller that the stucco defect is a material fact that must be disclosed to all potential buyers according to Florida law, and refuse to proceed with the sale without full disclosure. The correct answer is D. Inform the seller that the stucco defect is a material fact that must be disclosed to all potential buyers according to Florida law, and refuse to proceed with the sale without full disclosure. Explanation. Scenario analysis. This scenario presents a common ethical challenge for real estate professionals in Florida. The challenge lies in balancing the client's immediate desire for a quick sale with the legal and ethical obligation to disclose all material facts. Failing to disclose a known defect, even if the seller requests it, can lead to significant legal repercussions for both the agent and the seller, as well as damage to the agent's reputation and license. The agent must navigate the client relationship while upholding their fiduciary duties and adhering to Florida's real estate laws. Correct approach analysis. The best professional practice involves clearly and unequivocally informing the seller that the stucco issue is a material fact that must be disclosed to potential buyers, regardless of their wishes. This approach aligns directly with Florida Statute 475-278-1, which mandates that real estate licensees have a duty to disclose all known material facts that affect the value or desirability of a property. By prioritizing transparency and legal compliance, the agent protects all parties involved and upholds the integrity of the transaction. This also aligns with the Florida Real Estate Commission's emphasis on ethical conduct and consumer protection. Incorrect approaches analysis. One incorrect approach involves agreeing to the seller's request and omitting the stucco issue from the disclosure statement. This directly violates Florida Statute 475-278, 1, by failing to disclose a known material fact. Such an omission constitutes a breach of fiduciary duty to the buyer and can lead to legal action, disciplinary action by the Florida Real Estate Commission, including license suspension or revocation, and significant financial penalties. Another incorrect approach is to suggest that the seller can simply fix the stucco issue before listing the property without disclosing the prior problem. While repairs can be made, Florida law generally requires disclosure of past material defects and repairs, especially if the defect was significant or could recur. Failing to disclose the history of the stucco issue, even after repair, could still be considered a misrepresentation if the repair was not fully effective or if the underlying cause was not addressed. This approach attempts to circumvent disclosure requirements rather than fulfill them. A third incorrect approach is to advise the seller that the stucco issue is minor and not worth disclosing, leaving the decision entirely to the seller without providing clear guidance on legal obligations. While the seller ultimately makes the decision to sell, the agent has a professional and legal duty to advise them on what constitutes a material fact and the legal ramifications of non-disclosure. Abrogating this responsibility by deferring solely to the seller's subjective opinion without emphasizing legal mandates is a failure of professional judgment and adherence to Florida's real estate laws. Professional reasoning. Professionals in Florida's real estate market must adopt a decision-making process that prioritizes legal compliance and ethical conduct. When faced with a client request that conflicts with legal obligations, the professional must first identify the relevant Florida statutes and commission rules. They should then clearly communicate these requirements to the client, explaining the potential consequences of noncompliance. The agent's role is to guide the client through the transaction legally and ethically, not to facilitate or condone actions that violate the law or compromise the integrity of the transaction. Transparency, informed consent, and adherence to disclosure requirements are paramount. Question 14. Compliance review shows that a prospective buyer in Florida has explicitly stated they do not want to be shown any properties in neighborhoods with a significant population of a particular ethnic minority. As a licensed real estate salesperson in Florida, what is the most appropriate and legally compliant response to this request? Option A. Politely inform the buyer that you cannot fulfill their request because it violates Florida's Fair Housing Act, which prohibits discrimination based on race, color, religion, sex, familial status, or national origin, and offer to assist them in finding a home that meets their needs without discriminatory considerations. Option B. Agree to the buyer's request and subtly avoid showing properties in the mentioned neighborhoods, focusing instead on areas that align with their stated preference without directly mentioning the discriminatory aspect. Option C. Decline to work with the buyer entirely, without providing any specific reason for the refusal, to avoid any potential complications or discussions about fair housing. Option D. Proceed with showing properties across all neighborhoods as requested, assuming the buyer will make their own decisions, and that your role is simply to present options without addressing their discriminatory statement. Correct answer is A. Politely inform the buyer that you cannot fulfill their request because it violates Florida's Fair Housing Act, which prohibits discrimination based on race, color, religion, sex, familial status, or national origin, and offer to assist them in finding a home that meets their needs without discriminatory considerations. Explanation. Scenario analysis. This scenario is professionally challenging because it requires a real estate licensee to navigate a situation where a potential client's request, if acted upon, could lead to a violation of fair housing laws. The licensee must balance the desire to serve a client with the absolute legal and ethical obligation to uphold anti-discrimination principles. Misinterpreting or ignoring these principles can result in severe legal penalties, reputational damage, and loss of license. Careful judgment is required to identify and refuse discriminatory requests while maintaining a professional and helpful demeanor. Correct approach analysis. The best professional practice involves politely but firmly informing the client that the request cannot be fulfilled due to fair housing laws. This approach directly addresses the client's discriminatory request by explaining its illegality under Florida's Fair Housing Act. It educates the client on their rights and the licensee's obligations, thereby upholding ethical standards and legal compliance. This proactive stance prevents any discriminatory action from occurring and demonstrates the licensee's commitment to fair housing principles. Incorrect approaches analysis. One incorrect approach involves agreeing to the client's request and attempting to subtly steer them towards properties that might align with their discriminatory preference without explicitly stating it. This is a violation of Florida's Fair Housing Act because it involves discriminatory steering, which is prohibited, even if not overtly discriminatory. The intent to cater to a discriminatory preference is enough to constitute a violation. Another incorrect approach is to ignore the discriminatory nature of the request and proceed with showing properties as if the request was neutral. While this might seem like avoiding conflict, it implicitly condones the client's discriminatory stance and fails to educate them on fair housing principles. It also opens the door to potential future discriminatory actions by the client or the licensee if not addressed. A further incorrect approach is to refuse to work with the client altogether without explaining the reason. While the licensee is not obligated to work with every client, refusing service solely based on a discriminatory request without explanation can be misconstrued and does not serve the purpose of upholding fair housing laws. It misses an opportunity to educate the client and reinforce the importance of non-discrimination. Professional reasoning. Professionals should adopt a decision-making framework that prioritizes legal and ethical compliance. When faced with a request that potentially violates fair housing laws, the first step is to identify the discriminatory element. The next step is to consult relevant statutes, in this case, Florida's Fair Housing Act. The licensee must then communicate clearly and professionally to the client that the request cannot be accommodated due to legal prohibitions against discrimination. This communication should be firm, educational, and focused on the law, not on personal judgment of the client. The goal is to uphold the law, protect all parties, and maintain professional integrity. Question 15. Stakeholder feedback indicates that property managers in Florida are sometimes unsure how to best respond to tenant maintenance requests that may involve significant repairs. A tenant in a property managed by your firm in Miami, Florida, has reported a persistent leak in their bathroom ceiling, stating it is causing mold growth and making the bathroom unusable. The property management agreement with the owner clearly outlines the manager's responsibility to handle maintenance requests and inform the owner of significant issues. What is the most appropriate course of action for the property manager in this situation? Option A. Wait 2 weeks to see if the leak stops on its own before informing the property owner, as major repairs can be costly. Option B. Immediately investigate the reported leak. Document the findings, communicate the situation and potential repair costs to the property owner, and recommend a course of action in accordance with Florida Statutes Chapter 83. Option C. Inform the tenant that the property manager cannot get involved in maintenance issues and advise them to contact the owner directly. Option D. Tell the tenant to fix the leak themselves and deduct the cost from their next rent payment, as the property manager is not responsible for the actual repair work. The correct answer is B. Immediately investigate the reported leak, document the findings, communicate the situation and potential repair costs to the property owner, and recommend a course of action in accordance with Florida Statutes Chapter 83. Explanation. Scenario analysis. This scenario is professionally challenging because it requires a property manager to balance the fiduciary duty owed to the property owner with the legal obligations and ethical considerations of managing a rental property in Florida. The property manager must act in the owner's best interest while also ensuring compliance with Florida landlord-tenant laws and fair housing principles. Misinterpreting or ignoring tenant rights can lead to legal disputes, financial penalties, and damage to the property manager's reputation. Careful judgment is required to navigate the complexities of tenant communication, maintenance requests, and lease enforcement. Correct approach analysis. The best professional practice involves promptly and thoroughly investigating the tenant's maintenance request, documenting all communications and actions taken, and then advising the property owner of the situation and recommended course of action, adhering to the terms of the management agreement and Florida Statutes Chapter 83, Part Roman 2, Residential Landlord and Tenant. This approach ensures that the tenant's rights are respected. The property owner is kept informed and can make informed decisions, and all actions are compliant with Florida law. The property manager acts as an informed intermediary, facilitating a resolution that protects both parties' interests within the legal framework. Incorrect approaches analysis. One incorrect approach involves delaying the response to the tenant's request and only informing the owner after a significant period has passed. This failure to act promptly violates the implied covenant of habitability and the tenant's right to a safe and livable dwelling as outlined in Florida Statutes Chapter 83. It also breaches the property manager's duty to act diligently on behalf of the owner. Another incorrect approach is to dismiss the tenant's concerns without proper investigation and to refuse to involve the property owner. This demonstrates a lack of due diligence and a disregard for the tenant's rights and the property manager's responsibilities. It could lead to a constructive eviction claim by the tenant and a breach of the management agreement with the owner. A third incorrect approach is to instruct the tenant to make the repair themselves and deduct the cost from rent without consulting the owner or verifying the necessity and cost of the repair according to Florida statutes. This bypasses the owner's authority and responsibilities, potentially leading to disputes over the quality of the repair, the cost, and the owner's financial obligations. Professional reasoning. Professionals should approach such situations by prioritizing clear, documented communication with both the tenant and the owner. They must possess a strong understanding of Florida landlord-tenant laws, particularly regarding maintenance and repair obligations. A systematic process of receiving the request, investigating its validity and urgency, documenting all findings, consulting the management agreement, informing the owner of options and legal requirements, and then executing the agreed-upon plan is crucial. Ethical considerations, such as fair treatment of tenants and transparency with owners, must guide every step. Question 16. The assessment process reveals that a Florida real estate salesperson's license is due for renewal in 6 months. The salesperson has been actively practicing for several years and believes they have a good grasp of continuing education needs. They have not actively tracked their completed hours or specific course types since their last renewal. What is the most prudent course of action to ensure their license remains active and compliant with Florida regulations? Option A. Immediately consult the Florida Department of Business and Professional Regulation, DBPR, website to confirm the exact number of continuing education hours required, the specific content areas mandated by Florida Statutes Chapter 475 and Rule 61J2, Florida Administrative Code, and the deadline for completion, then schedule and complete approved courses accordingly. Option B. Wait until the license is within the final month before expiration to begin researching and completing any outstanding continuing education hours. Option C. Enroll in a series of online courses that appear comprehensive, without verifying if they are specifically approved by the Florida DBPR for salesperson continuing education credit. Option D. Assume the continuing education requirements are similar to previous renewal periods and complete a general real estate course to fulfill the perceived obligation. The correct answer is A. Immediately consult the Florida Department of Business and Professional Regulation, DBPR, website to confirm the exact number of continuing education hours required, the specific content areas mandated by Florida Statutes Chapter 475 and Rule 61J2, Florida Administrative Code, and the deadline for completion, then schedule and complete approved courses accordingly. Explanation. The assessment process reveals a scenario that is professionally challenging due to the inherent responsibility of maintaining an active and compliant professional license. A licensee must proactively manage their continuing education requirements to avoid lapses that could jeopardize their ability to practice. Careful judgment is required to ensure all requirements are met within the stipulated timelines and that the chosen courses are appropriate and approved. The best professional practice involves diligently tracking the Florida Department of Business and Professional Regulation, DBPR, requirements for real estate salesperson continuing education, including the specific number of hours, the types of courses mandated, e.g., core law specialty, and the renewal period deadlines. This approach ensures that the licensee remains compliant with Florida Statutes Chapter 475 and Rule 61J2, Florida Administrative Code, which govern real estate licensing and education. By proactively scheduling and completing these courses well in advance of the expiration date, the licensee avoids any potential penalties or the risk of an inactive license. An incorrect approach involves assuming that a general understanding of continuing education is sufficient without verifying the specific Florida requirements. This failure to adhere to the precise mandates of the DBPR, such as the required number of hours or the specific content areas, directly violates Florida's regulatory framework. Another incorrect approach is to wait until the license is nearing expiration to begin fulfilling continuing education obligations. This reactive strategy significantly increases the risk of not completing the required hours in time, potentially leading to an expired license and the inability to conduct real estate transactions legally in Florida. Furthermore, attempting to complete all required hours in a single, last-minute session, especially if the courses are not pre-approved by the DBPR, demonstrates a disregard for the spirit of continuing education, which is to foster ongoing professional development and knowledge updates, and may result in the courses not being accepted towards renewal. Professionals should employ a proactive decision-making framework that prioritizes understanding and meeting all licensing and continuing education obligations. This involves regularly consulting official state regulatory websites, like the Florida DBPR, noting renewal deadlines, and identifying approved continuing education providers and courses well in advance. A commitment to ongoing professional development, rather than merely a compliance exercise, is the hallmark of a responsible and ethical licensee. Question 17. Process analysis reveals that Florida real estate licensees often encounter situations involving commission splits and fee arrangements with other brokers and referral sources. Considering the regulatory framework governing real estate transactions in Florida, which of the following approaches best ensures compliance and professional integrity when establishing such financial agreements? Option A. All commission splits and fee arrangements with other brokers must be clearly defined in a written agreement signed by all parties involved prior to the commencement of services, detailing the exact compensation terms. Option B. Accepting referral fees from unlicensed individuals is permissible as long as the amount is nominal and the referral is for a potential buyer or seller. Option C. A verbal agreement on commission splits with a cooperating broker is sufficient, with the understanding that the specifics will be documented in the closing statement. Option D. The listing agreement only needs to specify the total commission, leaving the split with a cooperating broker to be decided at the discretion of the listing broker after the sale. The correct answer is A. All commission splits and fee arrangements with other brokers must be clearly defined in a written agreement signed by all parties involved prior to the commencement of services, detailing the exact compensation terms. Explanation. Scenario analysis. This scenario presents a professional challenge because commission structures and fee arrangements in Florida real estate are subject to strict disclosure and agreement requirements. Misunderstandings or improper documentation can lead to disputes, ethical violations, and potential legal repercussions, impacting the reputation of the licensee and the brokerage. Florida law emphasizes transparency and written agreements to protect both consumers and licensees. Correct approach analysis. The best professional practice involves clearly defining all commission splits and fee arrangements in a written agreement that is signed by all parties involved before the services are rendered. This agreement should explicitly detail the percentage or fixed fee, who is responsible for payment, and any conditions for earning the commission. This approach is correct because Florida Statutes Chapter 475 mandates that all brokerage agreements be in writing and clearly outline the terms of compensation. This ensures mutual understanding, prevents future disputes, and complies with the legal and ethical obligations of a Florida real estate licensee to act with honesty and integrity. Incorrect approaches analysis. One incorrect approach is to verbally agree on a commission split with another broker and proceed with the transaction, assuming the details will be finalized later. This is professionally unacceptable because it violates Florida's requirement for written brokerage agreements. Verbal agreements are difficult to enforce and can lead to significant disputes over terms, potentially resulting in a failure to be compensated or disciplinary action from the Florida Real Estate Commission. Another incorrect approach is to only document the commission to be paid to the listing broker in the listing agreement, without specifying the cooperative broker's share. This is professionally unacceptable because it fails to provide a clear, comprehensive agreement outlining the compensation for all parties involved in the transaction. While the listing agreement is crucial, It must also address how cooperating brokers will be compensated, as per standard industry practice and the spirit of Florida's disclosure requirements. A third incorrect approach is to accept a referral fee from an unlicensed individual without a written agreement, and without ensuring the individual is properly licensed in Florida for the type of referral activity. This is professionally unacceptable because Florida law strictly prohibits paying referral fees to unlicensed individuals for services that require a real estate license. Such actions can lead to severe penalties for the licensee and the brokerage, and it undermines the integrity of the licensed real estate profession. Professional reasoning. Professionals should always prioritize clear written agreements that fully disclose all terms of compensation. Before commencing any brokerage activity, a licensee must ensure a written contract is in place, signed by all relevant parties, detailing the commission structure, fee arrangements, and any conditions. This proactive approach, grounded in Florida's regulatory framework, minimizes risk, fosters trust, and upholds ethical standards. When in doubt, consulting with the brokerage's legal counsel or the Florida Department of Business and Professional Regulation is advisable. Question 18. During the evaluation of a residential property listing in Orlando, Florida, a buyer expresses significant concerns about the age of the roof and the condition of the HVAC system. The seller, who is represented by Brokerage A, has instructed their agent to emphasize the property's recent kitchen renovation and desirable neighborhood. Brokerage A's agent is aware that the roof is indeed old and the HVAC system is nearing the end of its lifespan, but they have not been explicitly instructed by the seller to disclose these specific issues to the buyer. What is the most appropriate course of action for Brokerage A's agent in this situation, according to Florida real estate brokerage laws? Option A. Downplay the buyer's concerns about the roof and HVAC system to the seller, focusing solely on the positive aspects of the property to maintain the seller's satisfaction. Option B. Advise the buyer to waive their inspection contingency to expedite the closing process, as the seller is eager to sell. Option C. Assure the buyer that the seller is a reasonable person and will likely address any major issues found during the inspection, without direct confirmation from the seller. Option D. Facilitate communication between the buyer and seller regarding the buyer's concerns, ensuring that both parties are aware of the issues and can negotiate accordingly, while continuing to market the property's strengths as instructed by the seller. The correct answer is D. Facilitate communication between the buyer and seller regarding the buyer's concerns, ensuring that both parties are aware of the issues and can negotiate accordingly, while continuing to market the property's strengths as instructed by the seller. Explanation. This scenario presents a professional challenge because a real estate broker must navigate the delicate balance between representing their client's interests and adhering to Florida's strict brokerage laws, particularly concerning disclosure and fiduciary duties. The broker's actions directly impact the integrity of the transaction and their license. Careful judgment is required to ensure all parties are treated fairly and legally. The best approach involves the broker acting as a neutral intermediary, facilitating communication and ensuring all required disclosures are made by both parties to each other, without personally endorsing or misrepresenting either property. This aligns with Florida Statute 475, which mandates that a broker must deal honestly and fairly with all parties in a real estate transaction. By facilitating disclosure and remaining neutral, the broker upholds their fiduciary duty to their seller, while also complying with the requirement to deal honestly with the buyer. This approach prevents the broker from becoming a guarantor of the buyer's property and avoids misrepresentation, which could lead to legal action and disciplinary measures by the Florida Real Estate Commission. An incorrect approach would be for the broker to actively downplay the buyer's concerns about the property's condition to their seller, or to assure the buyer that the seller will handle any necessary repairs without direct confirmation from the seller. This constitutes misrepresentation and a failure to deal honestly and fairly with the buyer, potentially violating Florida Statute 475. It also breaches the fiduciary duty owed to the seller by making promises on their behalf without authorization. Another incorrect approach is for the broker to refuse to convey the buyer's concerns to the seller, citing their primary duty to the seller. While the broker owes a fiduciary duty to the seller, this does not absolve them of the obligation to deal honestly and fairly with all parties. Florida law requires brokers to disclose all known material facts that affect the value of a property, and failing to relay the buyer's concerns to the seller could be seen as a failure to facilitate a transparent transaction. Finally, an incorrect approach would be for the broker to advise the buyer to waive their inspection contingency without full disclosure of the potential risks and without the seller's explicit agreement to address any findings. This could be construed as steering the buyer into a potentially unfavorable agreement and could lead to liability for the broker if undisclosed issues arise. Professionals should approach such situations by prioritizing transparency and adherence to Florida's real estate laws. This involves understanding their fiduciary duties to their client, while simultaneously recognizing their legal and ethical obligations to all parties involved in the transaction. When faced with conflicting interests or potential issues, brokers should err on the side of full disclosure and seek clarification or legal advice if necessary, rather than making assumptions or attempting to expedite the transaction at the expense of honesty and fairness. Question 19. What factors should a Florida real estate licensee prioritize when advising an investor client on the suitability of hard money loans and seller financing for a property acquisition? Option A. The investor's stated preference for a particular financing option without further exploration of alternative or more conventional methods. Option B. The speed at which the transaction can be closed and the potential for the licensee to earn a higher commission due to the unique financing structures. Option C. The availability of the financing options, regardless of their terms, and the licensee's personal familiarity with the lenders or sellers involved. Option D. The investor's understanding of the specific risks and benefits of each financing type, the need for independent legal and financial review, and the licensee's disclosure of any potential conflicts of interest. The correct answer is D. The investor's understanding of the specific risks and benefits of each financing type, the need for independent legal and financial review, and the licensee's disclosure of any potential conflicts of interest. Explanation. This scenario is professionally challenging because it requires a Florida real estate licensee to balance the client's desire for a quick transaction with the inherent risks associated with less conventional financing methods like hard money loans and seller financing. The licensee must ensure they are acting in the client's best interest, providing accurate information, and adhering to Florida's real estate regulations, particularly concerning disclosure and avoiding misrepresentation. The best approach involves thoroughly educating the investor on the specific risks and benefits of each financing option, emphasizing the due diligence required for hard money loans and the legal complexities of seller financing. This includes advising the investor to seek independent legal and financial counsel to review loan documents and understand their obligations. This approach is correct because Florida Statutes Chapter 475 mandates that licensees act with honesty, integrity, and competence, and provide clients with information necessary for informed decision-making. Disclosing potential pitfalls and recommending professional advice aligns with the fiduciary duty owed to the client and the regulatory requirement to avoid misleading practices. An incorrect approach would be to solely focus on facilitating the transaction without adequately explaining the risks of hard money loans, such as high interest rates, short repayment terms, and potentially predatory lending practices, or the legal intricacies and potential for disputes in seller financing arrangements. This failure to provide comprehensive risk disclosure violates Florida Statute 475, 278, which requires licensees to disclose all material facts that could affect a buyer's decision. Another incorrect approach would be to recommend a specific hard money lender or seller financing structure without disclosing any potential referral fees or conflicts of interest, which could violate Florida Statute 475, 278 regarding disclosure of compensation and conflicts. Furthermore, advising the investor that these financing options are guaranteed or risk-free would constitute misrepresentation, a direct violation of Florida Statute 475, 42. Professionals should adopt a decision-making framework that prioritizes client education and protection. This involves understanding the client's financial situation and risk tolerance, clearly outlining the pros and cons of all available financing options, and strongly recommending independent professional review of all legal and financial documents. The licensee's role is to facilitate informed consent, not to provide financial or legal advice, and to ensure all disclosures are made in accordance with Florida law. Question 20. Market research demonstrates that in Florida, a property listed for $500 $000 with an agreed-upon commission rate of 6% is sold for $480,000. The listing agreement stipulates that the seller's broker will receive 3% of the sale price, and the buyer's broker will receive the remaining commission. If the buyer's broker's commission is to be calculated as a percentage of the total commission earned by the seller's broker, and the buyer's broker is to receive 50% of the seller's broker's commission, what is the amount the buyer's broker will receive? Option A, $7,200. Option B, $13,500. Option C, $9,600. Option D, $14,400. Correct answer is A, $7,200. Explanation: this scenario is professionally challenging because it requires a real estate licensee to navigate the complexities of agency disclosure and fiduciary duties, while simultaneously managing financial expectations and potential conflicts of interest. The licensee must ensure full transparency and adherence to Florida's real estate laws, particularly concerning agency relationships, to avoid legal repercussions and maintain professional integrity. The core of the challenge lies in accurately calculating commission splits based on the agreed-upon terms and the final sale price, while also respecting the distinct roles and obligations owed to both the seller and the buyer. The best professional approach involves accurately calculating the total commission based on the agreed-upon percentage of the final sale price, and then applying the agreed-upon split between the listing broker and the buyer's broker. This approach ensures that all parties are treated fairly and that the commission is distributed according to the established agreements. Specifically, the licensee must first determine the total commission amount by multiplying the final sale price by the agreed commission rate. Then, the licensee must calculate the buyer's broker's share of that commission by multiplying the total commission by the agreed-upon split percentage. This method directly aligns with Florida Statute 475, which governs real estate brokerage relationships and mandates clear disclosure and adherence to contractual agreements. It upholds the fiduciary duties owed to both the seller, through the listing agreement, and the buyer, through the buyer representation agreement, ensuring that the licensee acts in the best interests of each party within the scope of their respective agreements. An incorrect approach would be to calculate the buyer's broker's commission based on a percentage of the seller's net proceeds after deducting the mortgage payoff and closing costs. This is ethically and legally flawed because it deviates from the agreed-upon commission structure, which is typically based on the gross sale price. Such a calculation would violate the terms of the listing agreement and potentially the buyer representation agreement, as it misrepresents the basis for commission calculation and could lead to disputes. Furthermore, it fails to acknowledge the seller's obligation to pay commission on the full sale price as per the listing agreement. Another incorrect approach would be to estimate the buyer's broker's commission by taking a percentage of the buyer's earnest money deposit. This is fundamentally wrong, as the earnest money deposit is not the sale price and is held in trust, not as a source for commission payment. This method ignores the agreed-upon commission rate and the actual sale price, leading to an inaccurate and likely insufficient commission for the buyer's broker and potentially misrepresenting the financial obligations of the transaction to the buyer. A final incorrect approach would be to simply divide the total commission by 2, assuming an equal split between the listing broker and the buyer's broker, without considering any specific contractual agreements or the actual commission rate applied to the sale price. This arbitrary division disregards the negotiated terms of the listing agreement and any separate buyer representation agreement, which may stipulate different commission splits or referral fees. It fails to account for the actual financial realities of the transaction and the specific agreements in place. The professional decision-making process for similar situations should begin with a thorough review of all relevant agreements, including the listing agreement and any buyer representation agreements. The licensee must then clearly identify the agreed-upon commission rate and how it is calculated, typically on the gross sale price. Next, the licensee must determine the agreed-upon split of that commission between the brokers. All calculations should be performed based on these agreed terms and the final sale price. Transparency and clear communication with all parties involved regarding commission structures and payouts are paramount to maintaining ethical practice and avoiding disputes.